by Admiral Markets Estonia for a global audience, and you should take into consideration that information is not suitable for everyone. We need to know about risk, and risk disclaimer is always stating all possible risks associated with Forex market. By accepting the risk, you're proceeding with me, and also this is my personal opinion only. Admiral UK Ltd takes no responsibility for the information accuracy, so this is only my opinion. Okay, solely my opinion. This is risky business, and this webinar is used for informational purposes. Also, for all of you who plan to invest in Forex market, I need to tell you a great thing that Admiral Markets has again started a good campaign. It's deposit bonus, and you know that I always say its deposit bonus is a great tool. So if you plan to invest in your account, now it's the time, because you can take up to 50% of your deposit bonus. It's a great tool because it is used to expand your margin. So don't think about it as money itself. Use it to expand your margin, because it will give you better possibilities to go with bigger stop losses, to actually trade with bigger leverage, to trade with expandable margins. So it's a great thing to have a deposit bonus. Okay, you can check it on Admiral Markets website. Okay, and of course Admiral Market Supreme Edition as a great tool. Okay, now risk disclaimer explaining how we do these trades for all newcomers. So you need to give price a breathing room. You can always enter within 5 to 10 pips of the predicted level if it's in agreement with your system. Respect your stop loss always. Add the spread to your stop loss. Okay, so if you put stop loss, I always advise to use stop loss at the spread, because even if you trade on ECN account, add at least 3 pips to your stop loss, because very often on ECN accounts spread is very small. It's something like 0.5 to 1 pip. It's nothing really. So add at least 3 pips to your stop loss, because sometimes price can spike you out and then reverse in your direction. Okay, so I always suggest that you should add spread to your stop loss. We take only one position. First touches of the zones and levels, you should know that, and you should have known that by now. Those are usually most profitable one. Okay, so first touches of the zones. Position trades we are referring to as trend trades. Alternative trades are counter trend trades. Okay, breakout trades and scalp trade levels, if I post it, are done independently, so it can be used as second entry. Depending on time and volatility, usage of trailing stop is highly recommended, usually after 20 pips of a profit, not less. These setups are valid for today, tomorrow, and sometimes the day after tomorrow. Scalp trade should be done at or very close to important support resistance level. All of those are calculated by historical levels and Camarilla joined. You can add these levels to your system, pay attention to Twitter updates, and the term pips pool is the maximum available number of pips you could have got on recap entries. Prior week gave us these results. Euro dollar minus 80, pound dollar minus 50, Australian dollar plus 35 or plus 55 depending on your entry. Dollar Swissy 120, dollar yen 250 pips, and I also gave you advice on Twitter that after 200 pips you could scale out. So basically, I don't know if you're still in the trade. My trade has been closed, but it was good for, as you can see, scaling out. You could have made 200 pips. Okay, total pips pool for past week was 175 to 195. Definitely the best trade of the week, and one of the best trades so far has been dollar yen. Definitely dollar yen. Let's check those results. Euro dollar was a loss because we got into sell position here. You can see this is the time of the webinar, and unfortunately, well, maybe you could have closed this for some 20 pips, whatever, but I count this as a loss because I really had bigger target, not only 20 pips. But some people told me that they basically they were stopped at break even. So some people did not lose the trade. I count this trade as a loss because I really wanted to get 100 pips or 50 pips, not 20 pips. So you could see trade was rejected here again, again. Uh, I'm not sure if I gave you the advice to close at break even, but I will count this as a loss. Pound dollar, unfortunately, momentum was too high. It didn't stop at 53.0. It was stopped out with 50 pips stop loss. And you can see it here. This was the time of our webinar. And unfortunately, the trade was stopped out. Okay, it made some 15 pips, but well, that's nothing really. Australian dollar had a drawdown before we made good profits. So this was the time of the webinar. Exactly, we had sold here. Okay, there was a drawdown, and then suddenly it dropped 50 pips in our favor, and I gave advice to close the trade. So this was a good trade concerning how that there was basically strong rally after unemployment numbers for Australian dollar. Dollar Swissy was great trade. I explained on webinar that you should watch 90, 00 and 80 levels. Exactly around 98, it came to our target. So we had webinar here. This candle was webinar candle. It dropped here to our entry point and then subsequently went 120 pips in our favor. Okay. Dollar yen exactly came within 5 pips of our entry, and then it came in the zone. So this is the zone 80. Okay, and then you can see it here. Huge jump on dollar yen gave us more than 200 pips. Okay, so this was the trade of the week and one of the best trades so far, really. There was a single pip of a drawdown, so without any drawdown, straight from POC zone, 200 pips to 250 pips. Now let's talk about euro dollar. Let me pause the screen. Okay, I will open Twitter now. First of all, I really want you to follow me on Twitter because it's very important for you to know what I tweet, what I use, because I don't post on Facebook so often. I do, but not so often. Okay, let me find a tweet and then I will show you. Okay, let's see here. This was my tweet. Okay, euro dollar glassy stop at 30.70, of course, always 2-3 points of spread, and conservative stop 1.1405. Okay, why? Just because X cross was additional POC point. Here it was really a zone to sell the trade, to sell the pair, and you can see it was rejected. Now because FOMC will be due on Wednesday to Thursday, depending on your time zone, guys, you should definitely be careful. Do not overtrade. There could be some range, and definitely we can maybe expect 12.00 and below, but still we need to see a daily close below 12.50 or 12.80. At this point, it's rejecting. So that is why I have prepared another setup, possible setup if it happens. So this is sell around 1370 if we get any rally. I'm not sure that we will get any rally. Maybe a sell-off has already started because I did the analysis on Friday. This was Friday analysis with Forex Street. You can see 2 p.m. basically September. So I warned that you should really short the pair, And I gave I need to say a bold advice, because a lot of analysts are afraid to say the exact truth or what they think it should happen. And that is why I did this headline, and definitely I said, as long as the pair is below this level here, 1370, okay, this is ascending trend line, so you see a range is going up a bit, so we can always try to short it here, here or there, because there is an X cross now with confluence, with a confluence of 38.2 and previous historical sellers here. And 3020, by the time I did the analysis, you see the price was 1260, and then after my analysis it got here and it went up and then it was sold. So that is why I still think it should be sold. Well, particularly, as I say, I'm not sure that we will get another rally to this point here, but if we get a rally, I will not use big stop loss. You see, it's not a big stop loss. 40.35, I want to target 12.00 or 11.50. Maybe after FOMC, if FOMC is hawkish, or if Fed hike their cash rate, so there will be probable drop even to 1.1000. So I don't know what they will do. There are a lot of speculations. In my opinion, they're ready to hike. Really, they're ready to hike in my opinion, because really, you know, guys, when cash rate is at record level, it's really cheap to borrow the money. And now every country, after they hike the rates, will turn their assets to US. So that is why maybe they're restraining also from hiking the rates. Okay, so they have good unemployment. Inflation is flat. So in my opinion, if they want my opinion, maybe I would say, okay, this time you can keep the same, but definitely in December you should hike the rates. Okay, definitely. So that is why I don't have a position. Of course, I cannot decide if they will hike the rates. Okay, but if they ask me, but of course they will not ask me, because they decide what they want to do. I would say, if majority of members is for hiking the rates, then hike the rates. If minority is for hiking rates, then keep it till December. But definitely in December you should do it. Definitely you should do it, because now is the time. Unemployment is at record rate, guys. It's 5.1. So in last 7 years, US haven't had, I need to say, so good numbers. This is great number for unemployment. So that is why I'm not just watching technical analysis. I also follow a pure logic, okay, fundamental logic. I really expect that if rate is not, if they don't adopt rate hike, but statement is hawkish, I really expect dollar strength. So we need to wait. Okay. Now Goran is asking, if euro dollar fell, let's say 300 pips, and Fed does not raise their cash rate, and the statement is hawkish, can we expect continuation of the fall, or it will be taken into the price? Very good question, Goran. I think personally, I really think that euro dollar at this point, maybe it's already priced in, because you can see, you cannot say that euro dollar is bullish. Really, look at this. It can be bullish on 1 minute time frame, 5, 15 minutes if you want to scalp. Okay, you know, scalping methods are not what we do here on our recap trades, because 5, 10 pips you can say it's bullish, but we want to take a bigger trade, right? 50 pips, at least 20, 30 pips. So we are not going for 5 or 10 pips here. Look at this. This is the major level here, guys. Major level. And if you pull Fibonacci retracement here, okay, you can basically see that euro dollar tried to reach this level today. Okay, here. This is the zone. That is why I'm saying sell here, 70 to 90. But I'm not sure if it will get there, because I was basing my analysis on Friday. I did the analysis on Friday, and I based my analysis on Friday research. Now we have a trend line here, guys, and this is very clear. This is 4-hour time frame, and we have a trend line here, right? So I don't know if euro dollar is capable to reach this zone here. If it reaches the zone, then we could probably sell it. Okay, that is why I'm saying here, this zone 70 to 90, it can be good. It's X cross also here. We have an X cross here, you see, but this is now a little bit lower. The X cross comes exactly here at this point. Okay, now we have multiple resistance here on euro dollar. Okay, so that is why I'm not sure, guys, if we will reach our price. But still, for all of you who listen to me to sell euro dollar, try to manage your position, because now you're in profit. I'm not sure, maybe you probably close your trades, but that is why I say what I'm saying. 1370 to 90 is sell. This is stop loss, and you can scalp 1350. We have X cross here. So 1350 could be used for scalp trades. Now, still, it's very ungrateful now to say, because it's 2 days to FOMC. This is level to scalp, this is level to short. If it rejects from 30.50 without reaching 70 to 90, of course, provided that euro dollar rallies to this point here, try to use my technique how to turn scalp into intraday position. Yes, all signs are pointing to weak euro and strong dollar. Guys, it's not just about Fed, it's about ECB, because they need to dampen their inflation with weak euro. They don't love strong euro at this point. Okay? So they are not supporting strong euro. Derek is saying Ichimoku on daily time frame shows bullish trend. I don't trade Ichimoku. I know what Ichimoku is, Derek, but there are a lot of techniques to trade price action. Literally, there are thousands of ways to trade the market. I don't trade Ichimoku. The only thing I do at this point with this analysis is providing you with my Camarilla MACD method and analysis. So maybe Ichimoku is saying the daily is bullish trend. My analysis show completely opposite picture. And if on Ichimoku daily is bullish, well, I don't know, because as you can see, we have a bearish day today. So this is definitely bearish. Euro dollar dropped 80 pips, guys, today, from 70 to almost 80. Okay, yes, 83 was the low. So almost 100 pip of a drop, guys. So Ichimoku is, I cannot say it's right. I respect every method, whatever, but this is bearish. All right. I haven't been buying euro. I was selling euro dollar. Okay. So this is rejection, guys. Now, if you zoom into 1 hour time frame, you can see rejections. You see this is rejection. This is rejection now. This is rejection candle here. Very strong candle rejection. Okay. And this can be even head and shoulders here. So I don't know, maybe you want to buy euro dollar. As I cannot go against my views and I cannot go with other views. So the only thing I see is, as I explained on Friday, just because we had a touch of 30.70, next time I will sell this again. But I don't want to go with FOMC trade setup. I want this to happen before FOMC. I hope it will happen. I hope. If Fed raises their cash rate, okay, their bid rate, basically we can see this level, we can see 10.00, but still before I can call lower levels, Goran, I need to see daily close. It's not just fundamental views, it's also technical. So I need to see daily close. I need to see daily close. So this is what I see. If you want to buy euro dollar, then this is a possible buy level. 11.20 stop loss, 10.95, 20 pip trailing stop. Final TP is 12.00, and this could be treated as counter trend trade. So if you want to sell it. At this point, I hope that you read my analysis. You see the logic. I explained the logic why I will sell into rallies. Okay, I explained the logic here. Okay, so X cross and 30.70 are POC. It's POC at this point. Okay, it's POC, point of confluence here. Okay, and we have multiple of resistance here. Now probably 99% of you are not familiar with X cross concept. X cross is something which I use for determining confluence points and other various support resistance levels. You should apply and sign up for price action trading course, which is held every second Wednesday on Admiral Markets website. And that is, in that course, I would teach you how to make X crosses, how to determine trend lines. It's price action trading course. So sign up. Okay. So that is what I see on euro dollar. Okay. So that's it. Pound dollar, I would sell pound dollar. Very clear, very loud. I never back away from what I say. I'm always honest, and I'm always very direct and strict. I don't want to give you some shadowy analysis where everything can happen. I always want to provide you with the exact analysis, the exact levels. It's hard to do, it's hard to predict, but as you can see, it's working fine, and I never back away from any wins or any losses. This is what I'm saying, and that is always the truth. Before we begin with session recap, I show you the slide and the result. Clear and loud, I would sell pound dollar. Yes, POC is basically point of confluence. POC is my term which I use for defining entry zones and entry zones. Pound dollar is in downtrend. I would sell here at 55.30 only, 55.30 pip stop loss. 53.30 will be my target. Possible long here with this stop loss and 54.00 target. So I want to see 55.30 before I go in a sell on pound dollar. Okay, this is V-shaped reversal. It's trying to make cup and handle pattern. Okay, but guys, it's very close to important with important resistance. Look at this. Near-term history. Look. This is the zone for me to sell. Lazar is asking for US customers. Lazar, let's see. Okay. Okay, let me just see a question. So Lazar is asking for US customers. You can ask Admiral Markets about US customers. So you can call them, tell them that you have attended my webinar, and it would be good that if you are a US customer, you can apply for an account. Maybe they can accept it, but please call Admiral Market support and tell them. Okay. Carolyn is asking for X cross trend line. Yes, Carolyn, we will talk about X cross on price action trading course. Okay. So be patient, please. Okay. So you see, this is strong level, guys, very strong level. And here, this is, you can see it here. So it's actually in between 50 and 61.8. It's very, very close in between on major retracement. But here, guys, if you put this Fibonacci here, you can also see that this region here is also providing resistance. Just because I can say that this is V-shaped reversal, I expect possible bigger retracement to the upside. So in that case, bigger retracement would favor this level here. Okay, and I will be monitoring this very, very closely because it's actual double bottom which has been broken, and also that is previous double. So this is double bottom here and previous double top. So okay, double bottom, double top, double bottom. So 55.30 is great level, and I think that price can be shorted here. Okay. Now, providing that this is also an important level, watch 55.10 to 55.30 also, okay? Because we have also 50 retracement, and if we put this here, you can see it's exactly sits at exactly at 61.8. So that is why I'm very, very careful. Okay, that is why I'm careful. So let's wait. I really want to see it here. And you see, euro dollar is rejecting now. Again, it's rejecting. It's 13.05. So guys, sometimes the price can lie to you. And I always explain why Friday is not so good for placing any trades. It's just because we have profit taking, then a lot of investors just don't want to risk anything over the weekend, and they're closing their positions, so the price can lie on Fridays. So don't be afraid, just listen to the analysis and don't be afraid of anything. Okay, let's see. Okay, that is for pound. I want to buy and sell. Buy here, sell there. Okay, now it's in no trading zone. Okay. Okay. Now, Australian dollar. We will have monetary meeting minutes. I explained today in the analysis that this level where we are now at this point can be used for short scalps. And if you were scalping today, that was the level for you to scalp today. Okay, here I explained that the first POC is here, and you can see that the price is rejecting here. Okay, is rejecting the region here, and this is second POC. From risk reward perspective, POC 2 is better to short into, but still we need to watch reactions around first POC, as the zone could give some short-term opportunities. Short-term opportunities means scalping opportunities, okay? So today's scalping opportunities are at 71.40, but for making a bigger position, longer position, I would want to sell here. 71.8, 72.30, 70.70, 69.80. That is where I want to sell, really, okay? And I'm really eager to sell it if it jumps there, okay? Because Australian dollar is currently in downtrend. And we use rallies to short, okay? We are using rallies to short into, okay? Now, guys, here, and I will show you the screen. At this point, Australian dollar is rejecting, but you see it's almost the same pattern except for this one. So this is a form of inverted head and shoulders here. So this is inverted head and shoulders. And now I will show you from this point on to this point on here. We have 50 Fibonacci, but even if you put it here at this double top here, you see it's still 50 Fibonacci and 61.8 exactly here, guys. So look at this zone. Now it's trying to break this zone here. See, it's making double top at this point. But here, if it breaks here, I would go for a sell, because from risk to reward ratio, we have better opportunity, much better opportunity. Only 50 stop, and we can try to target 70, 70, 69, 80. I advise you guys to use trailing stop just because tonight we'll have monetary meeting minutes. Okay, don't forget about it. It will be strong release, so pay attention to it if you trade Australian dollar. Dollar CAD is uptrend. As you know, I've been buying dips in dollar CAD, and I want to see it around 31.50, 31.00 stop loss, 33.80. Dollar CAD is good to go long. It's buy the dips. This is basically, this looks very, very bullish, okay? But it still has the room to go down and up. So if we get a drop, a dip to 31.50, okay, even then we will be able to adjust this trend line, which will show it like this. So there will be another possible jump at this region here, okay? So I want to see a drop, a dip towards this zone here, and then I will be looking to buy it, okay? Dollar CAD is buy into dips. Don't forget it. Buy into dips, okay? Very bullish in my opinion. And only 50 pip stop loss for a potential 33.80 target, okay? Okay, check AUD price, Australian dollar price, yes. Bogumi is saying, yes, okay, I see, it doesn't matter, you know what I was referring to. Zero, of course. I will correct it now. This is only a typo, but you know the logic and you understand the logic. So like this. Okay. So thank you for spotting this. Okay. That is Australian dollar. Okay. Now we want to see our next potential trade, dollar yen. This is my setup for dollar yen. I think the price is close to entry. Yes, indeed. The entry is at this point. So I think that this is head and shoulders inverse head and shoulders. And we have a possibility to go long now. The price for stop loss is not far. It's only 35 pips plus the spread. So include 3 pips. And 122.00 is the target, of course. So let's see if dollar yen would provide us with some pips at this point, okay? And dollar yen so far has been very, very good. So I hope that this trade also would be a good winner. Okay, let's hope for that. Okay, so dollar yen at this point can be entry. Okay, 35 pip is the stop and 122 is the target. Okay, yes, we just hit the level. We just hit the level. It happens sometimes, okay, with our trades, and this is now the time. If you want to go long, okay, with 35 pip stop plus the spread. So it's something like 52, something like this, okay? Okay, 51, 50, 52, okay? It has still room to go up, and even on 4-hour time frame, we can see how inverted head and shoulders are shaping up. If it breaks this low here, then we can be back in neutral to bullish territory, okay? So pay attention, okay? Always use stop loss, and of course not a risk higher than 0.5 or maximum 1% per trade. Maximum, guys. It will save your account, okay? So be focused on gradually multiplying your account, okay? Will not the oil affect dollar CAD movement? Well, dollar CAD is indeed affected by oil, but still you can see that dollar CAD is okay. It's sell here, but I've been buying into dips because you can see a big trend line over there and a big supporting trend line here. And if you zoom it out here, what do you think? Is this bullish? This looks bullish to me. That is why I am buying dollar CAD rallies. Sorry, dips. I'm buying into dips, and so far we only had dollar CAD long trades on our session recap webinars. So my opinion is that dollar CAD could be really bottom dips. Okay. So I will re-roll the slides again. So if you have any questions, you can ask me. Okay. So dollar yen is currently in our entry zone. So yeah. So yeah, be very careful because there will be, I think, also statement from Japan. I'm not sure when it will happen. Yes, it will be in Asia session. So please be careful. Okay, be careful and do not risk much. Oh, Caroline, Sorry, I forgot to analyze DAX index. Yeah, dollar CAD, I taken that into account. I think, Derek, you asked me about dollar CAD, and I promised you, and yes, dollar CAD, I did the analysis. But DAX, yes, DAX will, I need really to pay attention to DAX. I think I can do it next time. Sorry for this, I really forgot. I know that I needed to do dollar CAD, so that is why I did dollar CAD. But for DAX, yes. You wonder when you will see DAX. Next time, Derek, next time, really, I need to write it down, so next time. A monetary statement, as I say, will be due soon, but it will happen after. So this is my time. I'm using now, you see, Forex Factory calendar. So it's basically my time. It's GMT +2. So exactly after 3:30, probably this usually happens at, let's say, 5 p.m., 6 p.m. in the morning. So maybe it will be 4 p.m., 4 a.m., sorry, 4 a.m. in the morning, 4 a.m. GMT, probably. So pay attention to it. I don't know. I think that we can see a jump in dollar yen, really. So yeah, this is what I'm paying attention to. Australian dollar, because we can see a drop if it rejects from our levels, really. We can see some nice drop if it rejects. Okay. Okay, let's see the slides. Dollar Swissy, Derek, okay. Dollar Swissy is by the dip. Derek, I will show you. The pound dollar, Australian dollar, dollar CAD, dollar yen. Okay. Dollar Swissy now. Look at this, guys. Buy the dip on dollar Swissy, really. At this perspective, it's very, very correlated with euro dollar. So when euro dollar is going down, dollar Swiss is going up, and vice versa. From this perspective, as you can see, it's rejecting, but we need to zoom a little bit lower. And currently, it's sitting at strong support. So this is support, this is support. I would go with buy into dip, but now I can do it like this. And there are good levels here, but I'm not sure that it will come that far. But if euro dollar rallies to our zone for a sell, dollar Swissy could dip here because they are moving in opposite direction. Okay, you know that already. Very high correlation, negative correlation between euro dollar and dollar Swissy. Okay, so that is, I want to see a dip, because now euro dollar is already rejecting from our level. So if I buy dollar Swissy now, I expect euro dollar to go down. Yes, I would love to see it, but also it wouldn't do any bad if we see another rally in euro dollar to sell it where I would like to sell it. But in that case, dollar Swissy would dip down. I particularly think that dollar Swissy should be bought on dips, but exactly maybe here at this point 96, 70, 65. But if we get a dollar rally, euro dollar rally, then focus on 96.00 level. So okay, it depends really, Derek. It's very, how can I say, it's basically the same. If you open one lot of euro dollar and a second lot of dollar Swissy, it's like that you're having two lots on either the euro dollar or dollar Swissy, because they are so strong. They have a so strong negative correlation, and it's always like that. When euro dollar is going up, dollar Swiss is going down, and vice versa. So instead of making two separate trades, you can always opt for either euro dollar or dollar Swissy. It doesn't matter. At this point, as you know, I would buy on dips and sell euro dollar on rallies. Buy the dip in dollar Swiss, sell euro dollar rally. If euro dollar rallies up to another sell spot, but you see it's been rejecting whole day from POC I gave on Friday. Now also, if we want to sell it at X cross POC 2 1370, we need to see a dip in dollar Swissy, then a rally in dollar Swissy, and another dip in euro dollar. So basically, dollar Swissy goes here, euro dollar goes up, then we sell euro dollar and dollar Swissy goes up. It's the same. Euro dollar, dollar Swissy, same thing, just in opposite direction. Okay? Do you have anything more to ask me? I don't see any questions, so I assume that everything is clear. Let's see what we will have from this recap. I hope that Caroline say I did ask. Caroline, what did you ask? Euro, this question. Placing OCO when trades happen when we sleep. Caroline, are you referring to trailing stop trades? What is OCO exactly? What you're referring? Trailing stop or the exact point for an entry? Order cancels order. I never place order cancel order. Never. The only thing I can do is to place pending order, not order cancels order. Pending order. Okay. Either buy stop, sell stop, or pending, or buy limit or sell limit. Only that. Okay. I don't place OCO. So my advice at this point, well, if you place one sell and one buy as alternative trade, you can try to do it. But the only thing which I'm against those kind of orders is because alternative trades, you should monitor alternative trades. Caroline, you should monitor alternative trades. Okay? You don't place OCO in MT4. I know what you're referring to, but it's not possible. You can only place pending order, not OCO. You can place, if you place pending buy, then it will be activated. But in the meantime, if it's pending sell also, it can be activated. So basically, maybe there is a script. Maybe there is a script, Caroline, but you should check it. I am not familiar that option. Maybe there is an option in Android Market Supreme, but I didn't test it. I need to be honest with you, just because I don't use those kind of orders. I use Admiral Market Supreme, but I never ever used OCOs. So that is why I think in Admiral Market Supreme maybe there is an option, but in MT4 there isn't an option. So the only thing I can say, try to follow our trend trades when placing orders. Trend trades. Okay. Yes, I know it's a good for placing alternative, and if alternative triggers, then it will cancel trend and vice versa. It's good. Yes, only one order gets triggered. I'm not familiar, but you can ask and you can check Supreme Edition. If I know something, I will tell you. And I can also ask Admiral Markets programmer team to do that. And if it happens, you will be first to know. I will tweet about it. Guys, we only have 5 more minutes, then our office from Germany will continue with webinars. So let's see those questions. Okay, what are your recommendations on lot sizes? Vincent, my recommendations from lot sizes is always, it doesn't matter, it depends on your account, Vincent. If your account, it depends on your account. So let's say that risk is fixed. So you should always use 0.3 to 0.8% of a risk per trade. Okay? Okay, guys, please listen to what I'm saying. You don't open random lot sizes. It's stupid because you will lose your account. It doesn't matter if your stop loss is 30 or 100 pips, because you use overall risk. You need to determine, Vincent, your lot size by your risk. So if your risk is always 0.5 or 1% per trade, then you will know how to calculate your lot entry or volume traded before you make an entry. And when you make an entry, you will have your fixed risk. Okay. Yes, too much margin is dangerous. Lazaro Diaz is saying. Indeed, Lazaro. It's too much. Okay. What did I teach you guys? If you cross 5% threshold, you are in danger zone. Believe me. I will repeat it again. If you cross 5% of a threshold, you are in danger zone. Okay. Do you focus only on major pair with dollar or some others too? Ella is asking. Yes, Ella, tomorrow I will do probably a minor pair analysis. So guys, from time to time you can expect that I do exotic pair or minor pair analysis. So sometimes I will do GBP New Zealand, sometimes I will do Euro New Zealand, CAD Yen, CAD Swissy, those pairs. So pay attention to Admiral Markets and Forex Factory. Jeff is saying, thank, like always, you're the best. Thank you, Jeff. Thank you for comments. Darshan wants to see slides, and then okay, dollar, Turkish lira. I'm afraid we are really running out of time, guys. We are really okay. Euro, Turkish lira, Dogan. Maybe tomorrow I will do that analysis. Unfortunately, we are running out of time. I need to do these slides again, and Euro, Turkish lira can be covered in my analysis. Dogan, are you from Turkey? Yes. If you are, then great. We are really having excellent. We are having a whole world here. US, Asia, Europe. Excellent. I really love you guys, and I really love when I see you in so big numbers. Every webinar we have, we always have more and more people who are listening to me and to these kind of things. So guys, bring your friends, bring your wives, bring your husbands, bring your girls, girlfriends, whatever. We need to do this together. Okay. We need to do this together. Okay. And it's free. That is most important. It's free. You don't pay for this. Okay. Okay, Australian dollar, dollar CAD. Yes, Dan. Dan is asking where you are going to post updates on today's webinar fastest. Twitter, indeed. Guys, Twitter is Tarantula FX. So this is my Twitter handle, and please use my Twitter handle. Okay. Harp, unfortunately, will not be free because Chris and I really invested a lot. But this is free. Okay. This is free. Australian dollar here. Australian. We have one more minute, guys, and so well. Okay, I note it down. I note it down. So yes, from time to time you can expect Euro, Turkish lira. You can expect Pound, New Zealand, CAD Yen, whatever. Yes. Yes, we will think of an alternative. Of course, with Admiral Markets, maybe we can think of something, and I think that we will do it. Yes. Lazaro, thank you. Darshan, thank you. Thanks a lot, guys. Thank you for your support. Thank you for being here with me, with us. And as always, guys, I will be here with you soon. Okay? Pay attention to my Twitter updates. Pay attention to Admiral Markets analysis. And I'll talk with you soon, guys. This is recorded and this will be uploaded. Thank you. And as always, guys, trade safe. Cheers.